Hi guys, we are now in our law class. This is our class 3, third class of law. First two classes we basically spent on introduction and dividend chapter. Quickly, can you see if you can recollect the dividend section numbers? 123, declaration of dividend. 123, subsection 3, interim dividend. 123, rule 3, 3 rules. 124, unpaid dividend account. 125, IPF. 126, abeyance. 127, penalty. That's it. Dividend chapter comes to an end. 5 marks is over. Clear, guys? Okay. Now our agenda is going to be to go to the next chapter. I'm going to go to the basics today. I'm going to go to the basics. Very much part of our syllabus. Not necessary I have to do basics first. In a crash batch, I will do this chapter last. But since most of you are studying first time, this part is something where you would have studied in foundation also. So this is the only part where you might have studied in foundation. So if you look at our Companies Act, we have totally 11 chapters. I told you in the first day itself, we have 11 chapters. Chapter 1 to 10 and chapter 11 is the new addition for new syllabus, which is a foreign company. This is 379 to 395. This is 1 to 148, which I told in the first class itself. Okay. Only chapter 1 and chapter 2 together, which is my preliminary and incorporation, half of this is foundation syllabus. 50% is foundation syllabus, but we are not going to learn like foundation. We are going to learn in a much in-depth manner. So once chapter 1, 2 gets over, half foundation, but we are going to see in-depth manner. Chapter 3 onwards is completely new for everybody studying inter. What we finished dividend is chapter 8. Are you following, guys? Okay. So I will do a few chapters in Companies Act and then I will immediately jump to other laws. That's the plan. Okay. Today I am going to take chapter 1 just to keep our basics simple. Remember, Companies Act totally has 470 sections. Part of our syllabus is 1 to 148, plus now you will have 379 to 395. In the book you get, it will be updated, nothing to worry. Schedules we have, and we have 11 chapters. In the book you get, it will change. Okay. Now I am going to start off with basics, guys. Very basics. First unit, we are going to classify companies. This is chapter 1 of your book. Very much part of syllabus. Will it come in every attempt? Not really sure, but it comes sometimes. Types of companies they will ask. So companies we are going to classify into various buckets. Okay, like I said, it's foundation, but again going to go in depth. Okay, companies we are going to classify based on formation, how company is formed, then based on liability, then based on foundation you studied, based on what is next, guys? Members, based on control, based on access to capital and others. Once I finish this chart, chapter 1 will come to an end for us. Then I will go and do chapter 2 so that the base is set for us. Chapter 2 has a lot of new things, but this is something that you should know before I can teach other chapters. Because I will keep referring to different types of companies. That time you can't struggle. You can't tell you don't know what it is. Okay. So we're going to see types of companies. Are you following, guys? Companies and its types. You can classify in any manner. It's like, let's take a cricket player. Let's take Ravichandran Ashwin. How to classify Ravichandran Ashwin based on teams? Ravichandran Ashwin playing for Indian team, one classification. Ravichandran Ashwin playing for IPL, currently Rajasthan Royals, one classification. Ashwin playing for state Tamil Nadu, that is another classification. Ashwin also plays for England county cricket. He plays for which team? Some team in England he plays test match. That also you will add classification based on that. So end of the day it's the same person, Ravichandran Ashwin playing cricket, classifying based on where he is playing. Tomorrow after retirement he might play T20 leagues in other countries. That also I will add. Are you following, guys? So same one company only, same one company. How you classify, what basis only we are changing. Ashwin test one classification, T20 one classification. Are you following, guys? That's it. We will go in the same order. So you have this mega chart with you. First, based on formation, we have three things. You might feel, sir, it's foundation, I studied in foundation. But now wait for it till we finish a few points. You see how much you remember from foundation. Okay. First thing, in formation, we have, first thing is registered company. What do you mean by registered company? Registered company means a company registered under the Companies Act 2013 or under any other previous act. The definition comes like this. Here I will be using material to an extent. You will be getting that. So registered company, if you see, is in simple, because these definitions they generally don't ask. Registered company means company registered under Companies Act 2013 and any other previous laws. For example, if a company is registered in 1956 Act, should it register again here? No. Before 1956 Act, we had other acts. Companies Act 1910, 13, other acts were there. 1916, all of that. Even those acts, if you are registered, you are still a company. You don't have to re-register. Are you following, guys? Once registered, it's fine. So first is a registered company. Okay. Next we have something called statutory company. See, based on formation means birth. How a company is born. How a company comes into life. A company can come into life today in India. Either registered under Companies Act, or even if I am not registered under Companies Act, I will still become a company. Example, statutory company. Can you give me an example? Statutory company. Statutory company means by law, by passing another law, company comes into existence. For example, LIC. Example, ICAI is a body corporate, but ICAI Act. ICAI, the entity, is not coming into force because of Companies Act. There is a separate act called ICAI Act. RBI, take RBI. RBI is an entity because of RBI Act. Classic example is LIC. LIC Act, we have a separate act. So LIC is a company, but not as per Companies Act. It's formed as per LIC Act. So companies can be formed even through statute, through a law. How company is formed. Are you understanding, guys? Last type of company, don't expect an exam, but since we're discussing based on formation, another type of company is chartered company. What is chartered company? Everybody knows the answer. I can guarantee you, everybody watching this knows what is a chartered company. What is a chartered company? What is a chartered company, guys? You all studied in school. I can guarantee in 8th standard or 7th standard, 6th, 7th or 8th standard, irrespective of which school you studied, I can challenge you studied. Have you heard of this company called East? East India Company, where you studied? School, social studies. You studied history subject, correct? History book. What is East India Company? British. During British rule, East India Company was the company incorporated by the British. That time did we have Companies Act? No. Or even if it's there, how companies were formed those days? King or queen in the official royal charter will sign, this becomes a company. If king puts a seal, it becomes company. So it's called official royal charter. Official royal charter, seal of the company makes it a chartered company. The name chartered comes from British rule, guys. Royal rule. Still we use the term chartered accountant, royal accountant. Are you following, guys? Understanding? We still use that term. Are you understanding? So chartered company. Today do we have these companies in existence? Is British rule there today? No. Are you following, guys? Okay. So we don't have chartered companies today. It's only a theory concept, history in CA class. Done, guys. Okay. So what to remember for exam? Based on formation, key point is registered company and statutory company. That's what we have here. Registered company is 2 subsection 20. Registered under this act or any other previous act. That is registered company. Statutory company, I hope it's visible in screen. Statutory company are corporations. See, it's company or corporations or public enterprise born into existence by a special act. For example, LIC, RBI. That means it has to be a law passed in the parliament through House of Parliament and President sign. Are you following, guys? Chartered company, association with investors and shareholders incorporated and granted exclusive rights by royal charter means king or queen for trade, exploration and colonization. That time British used to rule not only India, British used to rule even Australia. Do you know that? British used to rule India, British used to rule Australia, British used to rule so many countries. Colonization was that time. Okay. Example, East India Company. Now don't try, I'm going to take revenge on all. Over. Forget about it. Move on. Done. It's done. Clear, guys? Okay. This is types of companies based on formation. Have they asked an exam? Never in the history of CA exams in Inter. It's for your knowledge. Maybe MCQ they can ask. But statutory company is important. Registered company is important. When you're studying law, in exam, do they ask you ABCD? Come on, write ABCD. But you need to know the basics. It's like that. Following, guys. So formation is done, guys. There in our book. Registered company section 2 subsection 20. Following is 2 subsection 20. Clear? Done? Okay. What is section 1 of the Companies Act? We discussed. What is section 1? First class we discussed. What is section 1? What is that? Which act are we studying? Loudly, guys, recording also. Companies Act 2000. That is section 1. That's it. Section 1 is the name of the act. You are studying Income Tax Act in tax paper. What is section 1? Income Tax Act. Generally, name of the act is section 1. The title of the act is section 1. Following a name, guys. Very important to have a name. That is section 1. Section 2 is basically all our definitions we are going to see. Next, based on liability, guys. Based on liability. Are you following, guys? So I'm going to leave this chart, come down and use it. But you can write all the points in the chart itself because I'm scribbling. I'm coming down. Are you following, guys? Okay. Based on liability, we have three. We have three: company limited by shares, unlimited company and guarantee company. Okay. Unlimited and guarantee. I'll explain each of this. Okay. Limited by shares is what you and I know. If I say company has 15,000 shares, of rupees 10 face value, of rupees 10 face value, and if the paid up value is rupees 6, what is the unpaid value? 4. Now, what is your liability? Unpaid amount, how much? 4. So the maximum liability you can have is 4 into 15,000. Imagine shares are 10,000, 15,000 into 10, fully paid up, fully paid, all calls paid. What is the liability? 0. Liability is 0, guys. Are you following? Today's day and all, there is no concept of share call, first call, second call, final call is removed 10 years back. Today everything will be paid in application. I will show you in prospectus chapter. We will actually take prospectus of real companies and see. Are you following, guys? Okay. Even dividend chapter, I will show you a company, how they do all of that. Like we will take real life scenarios, go and see real life companies data. We will slowly get there, just starting. Okay. So limited by shares means your liability is only up to the unpaid amount, correct? Unpaid amount of what? Out of 10, whatever is unpaid. Clear, guys? This is limited by shares. What do you mean by unlimited liability? If shares is, for example, 15,000 into 10, my liability is unlimited, like a partnership firm. The concept of separate legal entity is applicable, but the concept of limited liability is not applicable. That means you are liable just like how a partner is liable in a partnership firm. Then, will you start unlimited company? Tomorrow, if you are starting a company, will you start unlimited company? Then I can rather start a partnership firm and save some money instead of doing audit, correct? Then why unlimited company? How many companies are there in India today as unlimited companies? Whole India. 0. Not even one company is there. The concept is scrapped. In practical, I am saying, why? Why will you start unlimited company in Companies Act? Come on, guys. Last company I remember is in 2016. GSK was one company. GSK, pharma company. Medicines. GSK brand was one company which had unlimited. 2016-17. Now nothing is there. Are you following logic, guys? So it's only a theoretical concept. Last one is a guarantee company. This is that. Okay. What is guarantee company? Under guarantee, we have another subsplit. But before I get there, let me write down number of shares. For example, in guarantee company, let's say the number of shares, we'll use the same thing, 15,000 into 10, and the paid up value is rupees 7 each. What is the unpaid amount? Rupees 3 each. Now, apart from this, additionally, the shareholder will give a promise, will give a commitment, will give a guarantee, plus apart from this rupees 3, he is saying, I will pay extra rupees 5 as guarantee. I will pay extra 5 as what, guys? Guarantee. So, what the shareholder is going to pay is going to be 15,000 into 3, unpaid amount. Overall is going to pay 15,000 into 10. Overall. Plus 15,000 into 5. Are you following, guys? Hello? Understanding of? When I will pay this? Look at this. If this is the lifetime of the company, if this is the lifetime of the company, this call money of rupees 3, correct? Call money, the 10 rupees per share is there, no? 10 rupees per share can be requested from the shareholder as a call any time during the time of the company. Are you following, guys? But this rupees 5 can be asked only when the company is going to be wound up. At the time of dissolution, that means, why will somebody go for dissolution? Why will somebody go for dissolution, guys? Why? Because mostly money is not sufficient. Bankruptcy, insolvency. That means I don't have money. That means my liabilities are more than my assets. So I need money. That's why shareholders have given a guarantee that at the time of winding up, I will pay additionally rupees 5 per share. So here he will pay 15,000 into 5. How much, guys? 75,000 he will pay extra. Are you following, guys? This is called a guarantee company. Is it there today? Yes. Are you understanding? Clear? Now I'm asking you a question. Shareholder paying this is optional or mandatory? Mandatory. If it's a guarantee company, sir, how do you know it's a guarantee company? At the time of registration, at the time of formation of company, you have to tick limited company or unlimited company or guarantee company. You have to tick. I will show you in next chapter. Are you following, guys? We will tick it. Are you understanding? I will show you all those forms. I will show you real MOA, real AOA. We will see all of that in our class in the next 2 chapters. Okay, fine. So this will be paid at the time of winding up. So keeping this in mind, this 75,000 is optional or mandatory? So in the company's balance sheet, can I show 75,000 as a non-current asset under other non-current assets? Schedule 3, you know accounts class. Anyway, you learn accounts. Can I show in balance sheet as an asset receivable 75,000? Are you following what I'm saying, guys? Can I show like that? Why no? My argument is shareholder will definitely pay this. He will pay me in the future time. Why can't I show as receivable, not a current asset? But why can't I show non-current asset? It's receivable, no? Why can't I show? So, it's paid during the process of winding up. It's not paid after wound up. During the process only it's paid. So, when I start my winding up process, dissolution, I will ask, he will pay. Correct? He will pay anytime this time, guys. Why can I show in balance sheet as a receivable? How many of you, yes? Not even one answer. Okay. How many of you no? Majority says no. But I want to know, why no? No one starts company to wind up. Nobody starts company to wind up. But every company has to wind up someday. Nobody is born to die. But everybody has to die someday. Correct? So keeping that philosophy in my mind, why can't I show non-current asset? Because someday company has to close down. Someday the earth will come to an end. Like, I'm talking not negative, guys, but I'm just talking practically. Why can't I show as non-current? Non-current means long term. Quickly, guys, why? Answer is no. Everybody said no. I'm sure nobody says yes. Because you don't see this in any balance sheet. But I want to know why no. Logic, very simple. We again studied in foundation and school. We mugged up fundamental accounting assumption. You studied so many times. Financial statements are prepared under what assumption? Going concern assumption. Where you studied this? Foundation and school. Some schools you studied. Okay, foundation you studied. Or otherwise, inter also you are studying now, guys. Financial statements are prepared on the assumption of going concern. What is going concern? Company will continue for a foreseeable future. So if my assumption is that company will continue for a foreseeable future, how can I have this? If I have this, the assumption like you said is company is going to close down. So because of going concern, this will not come. That means in accounts we have a chapter. First chapter in accounts you will study in inter. Those who are watching accounts, anyway you will study accounts. In accounts you have a chapter which says prepare financial statements with the going concern, without going concern. So if you are preparing financial statements without going concern, then this will come. Then you have to show this. Are you following, guys? Sir, for law, for exam, what I should know? That's it. Company classification based on liability, limited by shares, unlimited, guarantee company. Under guarantee company, this is what? Shares. This is guarantee. So under guarantee, we have two types of companies. We were discussing guarantee on top. Under guarantee, we have two types of guarantees. Guarantee company with share capital, guarantee company without share capital plus guarantee. Are you following, guys? So with the share capital means, let's say 15,000 into 10 plus rupees 5 guarantee. Without share capital means no share capital, but guarantee amount will be, let's say, 10 lakhs flat amount. Are you following? Sir, what do you mean by guarantee company without share capital? How is that possible? We will study later in share capital chapter. We have something called stock. So it's possible to have a company without share capital. Why, sir? Elon Musk taking over Twitter. Why should he have share capital? Share means when I have more people to share it. I am the only guy. Why do I need shares? Are you following? Fully it's converted to a stock. You will understand in share capital, but now understand we have guarantee company with share capital and without share capital. Either case you can have a guarantee. Are you following? That's what we have here. Company limited by shares 222, limited by guarantee. The members may undertake by the AOA at the time of formation to contribute to the assets of the company in the event of company being wound up. Company limited by guarantee can be a company with share capital or without share capital. We have all of this in notes. This is type notes, you will be getting it. And unlimited company means a company where liability is unlimited. Example, GE India Private Limited with unlimited company. Currently, name is strike off in arrows. That means the company is not there. It's not there, removed. GE India. Are you following, guys? Now, in our book, I'm showing it over here. It's not there in dividend chapter. It's not there in any other chapter. I have put it only in the first chapter for you to know. We will have something called knowledge pulse only in the first chapter. It's first, not relevant for exam. What is that? Just now I told. Do you ever think why unlimited company is allowed for a company? Next, when we talk about a company, why? Or next, when we talk about a company limited by guarantee, just now we saw, it means that money will definitely be received. Can a company show this receivable as asset in the balance sheet? Think out of the box to figure the answer. Answer I will not give, only question. Where are we discussing answer? In the class. Basically all the logic I am going to discuss. Are you following, guys? These knowledge pulses are for you to gain knowledge, but will it come in exam? No. Like this dabas, if I give throughout the book, pages will get wasted and unnecessary space. So I am giving only for chapter 1. So if somebody reading only book, they will know why. Logic more. Are you understanding, guys? Clear? It's there only for the first chapter. I would have given knowledge pulse. One more knowledge pulse will come here. Okay, fine. Only in first chapter I'll give. You ignore those boxes because we're anyway discussing them in the class. Other chapters I will ask you questions. Why we are doing that? Why we are doing that? For example, dividend chapter we finished. If I have to put knowledge pulse in dividend chapter, I have to keep why depreciation has to be set off before paying dividend. But if I give the answer in book, why class? Correct? Are you understanding, guys? Okay. Done. So we are now done with 2 classification. Come back here, guys. We have classified, we have finished the classification based on formation and based on liability. Are you following, guys? Easy. You studied all this in foundation, but is it the same depth? Hello? Yes. Good. No. Learn now. Okay. Next, based on members. Important area. Based on members, we have 1, 2, 3, 4. Private company, public company, small company, 1% company. Are you following, guys? We have 4 things where I'm going to spend the next 30-40 minutes to learn this. Okay. But before I teach this, I need to teach you what is. I'm going to come to these 4 companies. We will take that in a while. But I'm going to do a small deviation and go to control. Under control, we have 2 types. Holding and subsidiary, and we have associate company. We have holding and subsidiary, and what, guys? Associate company. Following, guys? Here, first I'm going to take holding and subsidiary, then I'll come to members. Okay. So under members we had public, private, 1% and small. So for the next 30 to 40 minutes, our agenda is to complete all of these. These are very basic because throughout the chapters I will keep using these terms. So it's important for us. Okay. Holding, subsidiary, everybody knows. Understand? Let's take a company. Let's say we call it Namo Limited. And let's say we have Shah Limited. Examples are not mine, guys. Past exam question in foundation and inter has Namo and Shah Limited, Namo Motors Limited, Shah Automobile Limited. It's a question, exam question. I'm not joking. It's there in the ICA, RTP and MTP. Okay. So I'm just borrowing the names from ICA, RTP and MTP, not communicating anything else. Now, come here. Namo Limited is a separate company. Shah Limited is a separate company. Namo Limited has, out of Shah Limited's, let's say Shah Limited has 5 lakh equity shares of 10 each. In this 5 lakhs, Namo has 3 lakh shares. Are you following, guys? What is the percentage? How much? 60%. Let us assume 1 share is equal to 1 vote. Let's assume what, guys? 1 share is equal to 1 vote. Clear? 1 share is 1 vote. Now, Namo is having 60% of control of Shah. Are you following? Clear, guys? That means if I have to control somebody, I need to have more than half, not 60, more than half. See, if Shah wants to take a decision, they have to pass a resolution. See, we have in Companies Act 2 types of resolution. You would have studied in foundation, we will again see in inter. What are the 2 types of resolution? Ordinary resolution and special resolution. Leave special resolution for now. Or let me first brief what is ordinary and special resolution, guys. We are going to again see that later. For those studying first time, very basic. If there are 100 people who are going to vote, if more than 50, if I want to pass a decision, come on, guys, democracy, 100 people are voting for election, only 100 people. 2 of them are standing in the election. How many, guys? 2 are standing. One is X, other is Y. Election, I can't use name. One is X and other is Y. How to know who won? Who got more votes? Assuming all the 100 are voting, You have only option to pick X or Y. How many picked X? Let's say 51 picked X, 49 picked Y. Who won? X. That only is simple democracy. More than, in this case, more than 50. That means more than half. So more than half, when a company is passing a resolution, if more than half vote in favor, that is called an ordinary resolution. Now comes the tricky part. Will everybody vote in election? No. Sir, leave sir. Why will I go there and wait in queue? Sir, I am going and waiting in queue. My voter ID is not there, they are telling. Many times I have gone for voting. They are saying your voter ID is not there. Then you have to wait there for half an hour, 1 hour, argue. Then they will take one more list. Yes sir, your name is there, go vote. Fine. So let's say out of 100 people, only 70 have come to vote. Now, X and Y. 40 voted for X, 30 voted for Y. Who won? Again X. Now it is more than half of not 100. Because if it's more than half of 100, it's 51. You want 51? No. It's more than half of people who are voting. That is very important. So to pass a resolution, it's more than half of people who are voting. Reliance has 33 lakh shareholders. Do you think they will all come for voting? Hello, then you need what? 30 cricket stadiums. For voting, 500 people might come. Assuming one share, one vote for now. Assuming everybody has one share, one individual. For ease of computation, then more than half is how much, guys? 251. More than 250, correct? So it's more than half of total voting power of those who are voting in the actual resolution. So to pass an ordinary resolution, you need to have more than half. Are you understanding? But we will assume everybody are voting. So if assume everybody is voting, guys. So if Namo has 5 lakh shares, if Namo is passing a decision, what resolution should Namo pass? Sorry, Shah. Shah has 5 lakh shares. If you thought, sir, what is saying? Shah has 5 lakh shares. If Shah wants to pass a resolution, how many should vote in favor? 2 lakh 50,000 001. Correct? More than half. Now, who has more than half in this company? Namo. So, Namo becomes controlling. Now, whatever you want to decide, Namo only has the power. Namo tells yes means yes. Namo tells no means no. Correct? So, in this case, if you have more than half of total, not shares, the wordings they have amended few years back to total voting power. Why, sir? Later in share capital chapter, I will teach you. One share is usually equal to, but in some cases, one share is not equal to. I will tell you later. We have a concept where one share can have 5 votes. Really possible. One share can have 10 votes. We will see in some other section called 43 Rule 4 of Companies Act. Our syllabus is there. Are you following, guys? Clear? Okay. So, all this discussion is to discuss about holding an subsidiary company. So, holding company is a company which has more than half of total voting power. Are you following up? Everybody clear? Now come back to same example of Namo and Shah. Now look at this, guys. Next example, only example, don't take example personally, guys. Okay. Next example. Now Namo has 3 lakh shares out of 5 lakh shares in Shah. Shah is having in BCCI, assume BCCI is having totally 10 lakh shares, guys. In that, Shah is having 7 lakh shares. So who is controlling BCCI? For the example, so who is controlling BCCI? Shah is controlling, assuming BCCI is a company. Shah is controlling BCCI. But Namo in BCCI has 0 shares. Are you following, guys? So Shah is controlling BCCI. Namo is controlling Shah. Now can I say, is Namo controlling BCCI? But no shares. Is it controlling? Are you following the example, guys? So between BCCI and Shah, who is the holding company? Shah is the holding company. How many of you studying about holding subsidiary first time? Anyone studying first time? Understanding? Good. So Shah is the holding company. BCCI is the, who is controlling becomes holding, whom I am controlling becomes subsidiary. So BCCI becomes subsidiary. Between Namo and Shah, Namo is the holding, Shah is the. Now my question is, between Namo and BCCI, is there a holding subsidiary relationship? Are you following, guys? Between Namo and Shah, you know. Between Shah and BCCI, you know. Between Namo and BCCI, is there any relationship? Hello? Between Namo and BCCI, Pooja, is there any relationship? Hello? Here, is there anything? Nothing. Namo has how many shares in BCCI? 0. But you tell me, common sense, is BCCI having power? Sorry, is Namo having power to decide anything for BCCI? How? Through Shah. Because Shah controls BCCI, Namo controls Shah. So Namo is the holding of BCCI, but indirectly, indirect control. Are you following, guys? Understanding of this is called indirect control. So definition of holding company is one company controls more than half of the total voting power of the other, either directly or indirectly. Directly is that what we saw, indirectly is Namo controlling BCCI. In other words, in simple words, sir, confusing. Give me example. We have grandfather, father and son. If father is controlling son and if grandfather is controlling father, then even though grandfather is not able to control son, grandfather is not able to control the grandson, he will control the grandson through the father. Are you understanding example, guys? That's the context. Don't write all this in exam. That too, for writing grandfather, if you write short form, meaning will be something else. Okay. Following, guys. So holding company is a company which controls more than half of the total voting power of the other, either directly or indirectly. Are you following, guys? Now let's take next example. I'm sure, or if you didn't watch the movie, it's okay. Have you watched this movie called Varis? It came in Tamil and Telugu. Old Vijay movie. Recently it came beginning of the year. Whenever it came, guys. Okay. If you didn't watch it, it's good. Don't watch now. Okay. Fine. In that movie, Vijay, hero Vijay, those who didn't watch, it's okay, guys. Those students, if anybody is buying the class from parts outside of South India or North India, wherever, it's okay. If you didn't watch the movie, you saved 3 hours and 200 rupees. No problem. Okay. Fine. Now, in that movie, what will happen? Vijay will come to a company. Okay. But he is not having ownership in the company. ownership will be Vijay's father. The movie is about who is going to be inheriting the property of father. That's the movie. Varis means what? That only. How to translate to English, guys? Legal hair. Legal hair. That only is varis. Okay. For those who don't know Tamil, no problem. Okay. Legal hair. So who is going to be the legal heir of that huge property? Thousands of crores is the movie all about. Okay. So in that movie, what will happen? Vijay will one day go to the company. Does he have any shares in the company? Nothing. But there will be one scene where he will control all the directors. Well, in second half one scene where he will control all the directors, guys. So all the directors in that movie will now listen to Vijay. In that movie, have you seen that scene, guys? Okay, when a song will come, one comedy scene they will keep. Okay, comedy or not, you should decide. Okay, fine. One director, they will control the director. Now, those who watch the movie in Telugu also see many Telugu movies also like that only. Okay, fine. It's copy from one Telugu movie, Allu Arjun movie copy, that same scene. You are controlling that directors. Now here, Vijay is not controlling shares. He is controlling directors. Because he is controlling directors, he is controlling the company. So you become holding company if you control the composition of board of directors. That means board of directors will dance to my tunes. What I say, they will listen. Are you following, guys? Are you understanding? Clear? For those who didn't watch the movie, leave it. Holding company is a company which controls more than half of the total voting power of the other, either directly or indirectly, or I control the composition of the board of directors. In this case, if Namo is having 0 shares in Shah, but Namo controls the directors of Shah, what I tell only you listen. I'll give another example. For example, only example, guys, example for classroom purpose. Namo and we have Reliance. Namo Limited and Reliance. Namo Limited and Reliance has 0 shares. But Reliance will follow and do what Namo tells. Then Namo is the holding of Reliance. Sir, no sir, it's not like that, sir. It's opposite, sir. Then Reliance will become holding. Namo Limited will become subsidiary. Are you following, guys? Relationship of holding and subsidiary. Are you understanding, guys? Clear? So definition of holding subsidiary is controlling more than half of the total voting power of the other directly or indirectly. It controls the composition of board of directors. Are you following, guys? Clear? That only is holding and subsidiary relationship. I'll show you definition. It's there in our book, but still. Holding company in relation to one or more other companies means a company of which such companies are subsidiary exercises more than half. Actually, you should use the word more than half of total voting power, either in its own or together with one or more other subsidiary companies, directly or controls the composition of board of directors. Clear, guys? Easy? Following, guys? Okay. Now, since we are discussing holding subsidiary, again I am telling you guys, all the examples are only for classroom discussion. Do not interpret in any other manner. Next, following, guys, disclaimer I am giving, guys. Fine. Fine. For you to understand concept of holding and subsidiary. Everybody clear? Now I will give some examples. You have to tell me if it's holding or subsidiary. We are going in depth for inter, guys. Now, Namo Limited is having 70% shares in Shah Limited. Is Namo holding of Shah? Yes. Shah Limited has 60% in BCCI Limited, assuming it's a company. Okay. Is Shah holding of BCCI? Yes. Is Namo holding of BCCI? Next. Shah is not having shares in BCCI. It will become problem. Shah is not having shares in BCCI, but Shah controls the composition of board of directors. That means what, sir? I can appoint or remove board of directors by my choice. Tomorrow, if Shah wants, I can remove members of BCCI and add new members. Correct? I can change the BCCI president. I can do this. Who has the control? Shah Limited. I'm not talking about Shah Limited. Are you following, guys? Clear? So, controlling the composition of board of directors also, you become holding. Now, will Namo become holding of BCCI? Yes. The relationship can be created either through equity, shares, or through controlling composition of board of directors. Are you following, guys? Now, Namo is called ultimate holding, Shah is called holding, BCCI is called subsidiary. Are you following, guys? Clear? Next, let's say X Limited, Z Limited, Y Limited. X Limited in Z has 60%, X Limited in Y has 70%. Possible, huh? Can there be one holding with subsidiary 1 and subsidiary 2? How many subsidiaries can I have? Like this. Any number. I can have any number. But what is not possible? Holding subsidiary 1, subsidiary 2, subsidiary 3. Like this, you can't keep going down and down. That limit stops at 2. In investment subsidiary, if it's operational, if it's core business, you can have many. But if it's an investment subsidiary, you can have only 2. Investment means creating a subsidiary for the purpose of investing money for holding assets. You can have only 2. Are you following, guys? Clear? Fine. Next concept. I am finishing all the concepts of holding subsidiary together. Mixing unit 1, unit 2, all of that. Next. Let's take for example, okay. Give me another example, 2 companies. Sorry? Nagawa. Saga. Raga Limited. One more company, guys. Saga. Fine. Saga Limited. Okay. Raga has in Saga 70% of the shares, guys. Now, can Saga have in Raga 70%? Are you following? If you're not able to understand, I'll put in easy words. X Limited, Y Limited. Can X have in Y 70%? Y have in X 70%? Are you following? If they have like this, who is the holding? Who is the holding? Who is the holding, guys? Are you following what I'm telling? Is it possible? Who is the holding, guys? Who is controlling whom? If you say it's possible, then next Raga will tell yes, Saga will tell no. Saga will tell yes, Raga will tell no. They will keep conflicting. Resolution will keep failing. Correct? So in life, only one person can control the other. Either this is possible or this is possible. It can keep changing. That's okay. One day X is holding. Tomorrow Y is holding. Then this won't be holding. That can keep changing. But at a given point, both can't have 70% because only one person can control the other. Both can't control each other. I'll give an example to understand better. In a relationship of husband and wife, either only husband can control wife or wife can control husband. Both can't control each other. Correct? Are you following, guys? Rahul's understanding is able to appreciate now itself, even before getting married. Okay. Are you following, guys? Okay. So only one person can control the other. Both can't control each other. It will create confusion. Are you understanding, guys? At the same point. So in holding subsidiary, we have some exceptions, guys. Section 19 of the Companies Act says holding subsidiaries with section 2 subsection 46. Leave the sections. Okay, subsidiary is 287. I won't insist on definition section numbers. Others only is where I am going to insist. Now here 19 is important. It says, so normally, therefore, in holding and subsidiary, the exception, the rule is subsidiary cannot hold shares in holding. This is something you would have studied in foundation itself. But why? This is the example. Husband and wife can't control each other. That's the reason. You can't control each other. If both people can control each other, who decides? See, if husband and wife are wanting to go out for dinner, husband is saying, we'll go to Asian restaurant. Wife is saying, we'll go to Italian. If both are having control, where will go? Separate only. Get separated. Are you following, guys? That's why holding subsidiary both can't control. Are you understanding, guys? Rahul, following? After I told the example only, he woke up today. Okay. Now, so in holding and subsidiary cannot hold shares in holding. But this principle, follow very carefully, guys. Follow. I'm going to give an example. Let's take same Raga and Saga, since you only guys gave that. Raga has in Saga, let's say 30%. Possible, huh? Hello? Is it holding? No. Because you have more than half of total voting power. Saga has in Raga 35%. Possible, huh? Yeah. Nobody is holding. That means this principle of subsidiary cannot have shares in holding is not applicable. Are you following, guys? So, this is possible. Raga and Saga. Now Raga made this 30 as 80. Made 30 as. So, Raga became holding. Saga became. What to do with this 35? We said subsidiary should not have shares in holding. But now subsidiary has shares in holding. What to do? Are you following the practicality of it? That means what? This is allowed or not allowed? Allowed or not allowed, guys? Why they are saying not allowed? If both of them have more than 50%, then both will become holding control. Here, who is the holding? Raga only is holding. Who is subsidiary? Having this 35, what happens? Nothing happens. So, they can have it. So, this point of subsidiary cannot hold shares in holding has exceptions. That exception only is section 19. In that exception 1. This you wouldn't have studied in foundation. Are you following, guys? Exception. Now look at this. Look at this. What is the exception here? Saga already had shares in Raga before the relationship of holding was established. Are you following, guys? Pooja, understanding? So, subsidiary has shares in holding before what, guys? Before the relationship of holding subsidiary is established. Are you following, guys? All of you with me? But they are saying this 35%, even though you have 35% of shares, if Saga is able to make some friends of other shareholders, with them they can have more than 50, then it will become a problem. He might do something. If I have 49, simply it won't take much to keep a Binami and get 2%, correct? Binami, we are famous Indians. So, they are saying such shares that you have before the relationship is established, you have that, but those shares will not have any voting power. I am removing that voting power. So this 35% what is there will not have any voting power. So for this there is no voting power. Are you following, guys? See, if you want to learn for exam, what remember? We spent 10 minutes for exam. Subsidiary cannot have shares in holding. Exception 1, such shares can be purchased before the relationship of holding is established, but that shares will not have any voting power. That's all for exam, guys. I can do that and finish law in 50 hours. Keep a PPT, read the PPT, 50 hours, collect 5,000 over. But that's not how you have to learn. Are you following, guys? We are learning logically, going through all the examples. Are you able to appreciate the concept, guys? Are you understanding? Law is all about common sense. I told you in the first class, I will keep telling you, law is all about common sense. I'll give another common sense example. Okay. In one class, student told, sir, you're telling law is common sense, common sense. Do you think I don't have common sense? Then apply it. You have to apply it. He messaged, sir, you're telling common sense, sir. Why, sir, you're telling so many times? We all have common sense. Then apply it. Okay. Now, follow. Let me give another example. Let's see if you're able to apply common sense now. Okay. Follow, guys. Let's take a company, Tata. Okay. Tata Sons is the holding company. Tata Sons subsidiary is Tata Motors. Tata Sons has 70% shares in Tata Motors. Who is the holding? Who is subsidiary? Tata Motors. Now in Tata Motors, let's say we have, okay, in Tata Sons, we have, let's say, a shareholder, we call him, let's say, Michael Jackson. Okay. Assume Michael Jackson is the shareholder of whom, guys? Tata Sons, not Motors. Michael Jackson is the shareholder of Tata Sons, which is the holding company. In Tata Sons, Michael Jackson has 10% of the shares. Are you following, guys? Okay. Now, Michael Jackson died. If you die, if a person dies, property goes to legal heir. But can I say it won't go to legal heir? I can give to somebody else. Hello? Is it mandatory to go to legal heir? No. Real life example. That famous hero, what's his name? Jackie Chan. Everyone knows him. From which country? What is this? Discrimination from all of you. Okay, some Asian country. Have you seen his movies? Is he rich? Oh, very rich. Okay. Jackie Chan has made a statement not now, 10 years back, that from his property to his kids, not even 1 rupee will go. Not even 1 rupee, fully to charity. His sons filed case on him. He said, you earn, why you want my money? So it's not mandatory. It has to go to legal heir. I can give it to whomever I want. So that term is called legal representative. Are you following it? It's called what? Legal representative. Imagine Michael Jackson is saying, upon my death, my property will go to Tata Motors. Tata Motors is the legal representative of Michael Jackson. Now look at this beautiful structure. Michael Jackson has shares of Tata Sons. How much? Michael Jackson died. Now the shares will go to Tata Motors as a legal. Now Tata Motors is subsidiary of Tata Sons. So Tata Motors now indirectly is having shares in Tata Sons. Are you following? Our rule is what? Subsidiary should not have shares in, but they have a. So it becomes an becomes an exception. It becomes an exception. Can you frame this example as into exception? Look at this. Tata Motors is having shares of Tata Sons as a legal representative of the deceased. Convert to English. What is it? Subsidiary has shares of holding as a legal representative of the deceased. Makes sense? Are you getting logic, guys? See, I can straight away teach like others. Write the exception, then teach you. Common sense. Were you able to apply common sense here? Allowed. That's it. So my exception 2 is my common sense 2, which says subsidiary can have shares of holding as a legal representative of the deceased. Subsidiary can have shares of holding as a legal representative of the deceased. Are you following, guys? Everybody understanding? We have all the points in books, guys. In books, first exception, the subsidiary was already of a subsidiary before the relationship was. Subsidiary has shares in holding before relationship was established. Second, can hold as legal representative of deceased member of the holding company. That's what Michael Jackson example. Are you following, guys? Clear? And last one, let me explain with an example. See, examples in book will be A, B, C. Because book is print. I should be careful, guys, what I use in the book. Okay. Now, classroom example purpose, disclaimer. Okay. Now, let's take another example. Vijay Mallya. Okay. Vijay Mallya has a lot of money. Vijay Mallya wants to give all his money to his son. But his son is not using the money properly. He is going to casino, he is going here, he is going there, he is spending the money. So Vijay Mallya is scared that if I give all my money to my son, what he will do? Spend. So what Vijay Mallya did, he is appointing his trusted friend Gopinath. He is calling his trusted friend Gopinath and he is telling Gopinath, Gopinath, all my assets I will give to you. I will give it to you. You take care of my assets. For example, land and building. You take care of my land and building. From that, whatever rent is coming, you give it to my son. So that son will not get the property. Can son sell the land and building? No. He will only get rent. Do what you want. So Vijay Mallya is fine. Safe, no. Safe means what? He has some sense of security. That my son, let him spend. But how much he can spend, Gopinath only will decide. So, who created this agreement? Vijay Mallya. So, he only drafted this triangle agreement between three people. So, he is called the author. It's created for whose benefit? Son is called beneficiary. Whom he is trusting with his property? Gopinath is trusting. This is an agreement of trust. This is an agreement of trust. Trust is an agreement between three parties, author, trustee and beneficiary, where the author of a trust transfers his property to the trustee for the benefit of the beneficiary. Are you following, guys? All schools and colleges are trust. Schools, colleges are a trust where somebody created the school. There are many schools. For example, if you take Chennai, Loyola College. Loyola College is a trust, is a college. Who owns it? Many years back, someone owned it. They created that. Now the trustee of Loyola College is the church. The father in the church. It's for the benefit of students. So many students, if you fall within few checklists, for you admission is free, or you get subsidized admission. You don't have to pay full fees, correct? So many colleges and schools are a trust. Income tax tells trust, income taxes 0. Income tax tells, guys, not me. It's in CA final. So all the schools and colleges, income tax is 0. Whichever school you study, I can tell you. All the political parties are a trust. They form like a trust. Political party is formed for the benefit of public. So political party income tax is 0. Are you following, guys? You will see more about this in income tax. I just gave you teaser in law. Sir, what I want to know, many of you might have been, I want to know only 3 terms. Who is author of trust? Who is trustee? Who is beneficiary? Are you following, guys? So with this background, now read this. Subsidiary. So imagine author is Tata Sons. Trustee is again Tata Motors. Tata does a lot of charitable work. So beneficiary is public. So Tata Sons is telling Tata Motors to have my shares. Whose shares? Tata Sons shares as a trustee for the public. Can the trustee sell the asset? No. Can the church sell the Loyola College? No. Can the school principal, who is now the trustee of the school, sell the school? Are you able to follow, guys? No. They only take care of the school for benefit of students. Are you understanding, guys? Now come here, point. Subsidiary holds shares as a trustee for the holding company. Are you able to follow, guys? Understanding? Here I give example. Vijay Mallya, VM. No one knows. Reading book, they won't know. VM is the author. Deepak is trustee. Son is the beneficiary. Following, 1 second. Yes, go with the doubt. If trustee also died, Rahul's doubt. Sir, what happens if trustee died? That's why, if you take for example, school principal, they won't tell XYZ principal. They will tell principal of the school is trustee. Who is principal? So if this principal dies, next principal is trustee. You can have multiple trustees, and the trustee can nominate somebody else as trustee. So if X is trustee, he can nominate Y as trustee if X dies. So Y can't go kill X. Trustee cannot use the asset for himself. He decides who can use the asset for whose benefit. I can't give it for everybody. Author will define all the terms. College admission can be given to students who satisfy these criteria, not for everybody. Like that, they will give conditions. Sir, all this okay, sir. Exam, what should I remember? For exam, that's why I asked here. Did you ever think why a subsidiary company cannot hold shares in holding company? Husband, wife, double control, not possible. Why the law doesn't allow for that? Why do they allow for a certain percentage? They allow up to 49% if you have it before relationship. Correct? So here, exceptions to subsidiary company holding shares in holding company. The subsidiary was already a shareholder of the holding company before relationship was established. First point you wrote. Then we wrote, C can hold as a legal representative of deceased member of holding company. Subsidiary as trustee of the holding company. And some note I told you, a company can make only 2 layers of investment. That means holding S1, S2. You have to stop if it's investment subsidiary. If it's operational subsidiary, it can be any number. Are you following, guys? That's it. This section, these exceptions, these 3 exceptions are which section? 19. What is section 19? When subsidiary company can have shares in holding company. What are the 3 exceptions, guys? For exam, remember 3 exceptions. 1, subsidiary has shares in holding before the relationship was established. 2, subsidiary is a legal representative of the deceased member of holding. 3, as a trustee of the holding company. Look at the third point is simple. Subsidiary company Tata Motors holds shares as trustee for Tata Sons. Trustee, I am a trustee of holding. Why all these examples, sir? To tell you what is trustee only, I have to teach you what is trust. How many of you knew what is trust before itself? No one knows. Now you know what who's an author? Tirupati temple is a trust for the benefit of devotees. So the money you put in hundi, richest temple in the world, Tirupati, income taxes 0. Are you following it? Because it's a trust. But when it's income tax is 0, income tax has some conditions. I don't want to confuse you with numbers. You learn in final. It's not always exempt. They have some conditions you have to satisfy. Okay. Are you following, guys? Clear? So what you learned, I want to know. Section 19 is what again? 3 exceptions. When subsidiary can have shares in holding. What is holding subsidiary? Controls more than half of total voting power directly or indirectly, or composition of board of directors. Now you know in depth of holding and subsidiary. Clear? Yes, Vignesh. What if subsidiary company has? How? You are saying subsidiary company is having voting power to control holding. How is that possible? X is, okay, X, Y and Z. Who's holding? X has 70% in Y. 60% we can keep. 60% in. Z has in X 80%. This is your question. This is called, you learn in CA final and consolidation, this is called a triangle holding. So X is the holding of Y, Y is the holding of Z, Z is the holding of X. Is this allowed? It's allowed. It's allowed. It's very much allowed. Only Y can't have an X. So indirectly you can have. This is called a triangle holding. Are you following? Yes, very much allowed. Law does not restrict this. Are you understanding? Clear? Okay. We are done with holding and subsidiary. For exam, what to remember? Very simple. I gave in book. What is holding and subsidiary? You cannot hold, subsidiary cannot hold shares in holding. If you allot shares, sir, in this case, if Y is giving shares to X, what happens? Such an allotment is void. Allotment is void. Allotment is not valid. What are the exceptions? 3 exceptions. And how many investment subsidiaries you can have? 2. That's it. Are you following, guys? Now we will come back to our private and public company. Come back to, see, we have finished now control. Control has 2 things, holding subsidiary and associate. Associate, I will come to it later. Now I am coming back to private and public company. See, I am teaching you from scratch as if you don't know holding subsidiary. Otherwise, crash batch means I will spend this entire chapter of chapter 1 is 1 hour, full chapter. I am teaching you regular batch May 24 or November 24 or whichever 24 or 25 you are watching. Okay. New syllabus. We are learning from scratch as if you don't know anything. Clear, guys? Following? Done, guys? Okay. Yeah. Those who are watching recording of these law classes, 2024 exams, this is valid. If you are watching this after your new syllabus, 2024 exams, don't ask me if something goes wrong. Recording, I am talking to you. Okay. If there's something goes wrong, amendment, don't ask me. 2024 exams, it's fine. And if you have taken the course from me, whatever amendment is there, you will be in WhatsApp group. I will send it to you. All the amendments, you will get it as separate classes. If you are watching this in Telegram, I can't do anything. I can't support you in terms of giving you amendments. Okay. Come back, private and public company. The definition of public company is a company which is other than private. Simple definition. If I go back, public company means a company which is not a private company. That is easy, guys. And they have one more part. We will come to that later. Now we will understand definition of private in detail. Exam viewpoint, same as foundation. Private company should have minimum paid up share capital as prescribed. What is prescribed is 1 lakh. So private company's minimum paid up share capital is 1 lakh. They won't ask in exam. Don't worry. You should have minimum paid up share capital. Minimum number of members, how many, guys? Private. 2. Maximum 200 for a private company. For a public company, minimum is 7. Maximum, you can have even 50 crore members, no problem. That's your headache. You have it. Are you following, guys? Okay. Now, private company, if you see next, what they are saying, can private company issue shares to public? No, you are prohibited to issue shares to public. Can I transfer shares? Yes, but there is a restriction of what, guys? Share transfer. Clear? All of you following, guys? There is a restriction of share transfer. These are simple. What do you mean by restriction of share transfer? Restriction of share transfer means you can transfer shares within the shareholder. So if there are 30 shareholders in private company, within those 30, I can transfer how much I want to. But you can't transfer to a new person outside. First he should be allotted new shares. Then only you can transfer to him. There are some compliances to follow. It's not that freely transferable like a public company. Fine. These all I know, sir. What is my important key point? For exam, what they test? These are provisions. Minimum paid up share capital 1 lakh, number of members 2 to 200, prohibited to issue shares to public, restriction on share transfer. For the purpose of counting 200, we have some limits. We have some limits to count 200. Are you all following, guys? Are you all with me? Hello? There are some limits for counting 200. What are these limits? Very important. Limit to count 200. You are studying in foundation. They are saying joint shareholders should be treated as one. Husband, wife and kid together, one shareholder. Count as one. For counting 200. For counting the number of 200. Because if you cross 200, you are not a private company. Next. What is the next restriction? Employees, this I want to know why. Employees, when they received shares during employment, see, employees, I'm classifying into two, guys. Employees, present employees and past employees. Employees that received shares present during employment, employees who received shares during employment, and past employees who received shares when they were employees. This I will not count for the purpose of 200. Are you following, guys? Let me give an example. Let's say Ashwin, post qualification, what's your dream company, Ashwin, to join? Which company you want to work? Some dream company, I want to work here, nothing like that. Okay, now I'm asking you, quickly in 10 seconds, among the companies you know, which company if you get job after qualifying, you will be happy? Any company, it can be anything. As a CA in that company, which one? 5 seconds only you have, 5. Reliance. So Ashwin says, if he joins Reliance as a CA, he'll be happy. He joined Reliance as a CA, he worked very hard for 5 years. Looking at his working, hard working, during his employment, Reliance gave to Ashwin 10,000 shares. Okay. Now, assuming Reliance is a private company, for our example, for counting 200, Ashwin will not be counted. Are you following, guys? Now, after Reliance, when Ashwin got shares when he was in Reliance, let's say Ashwin joined Reliance in Jan 2028. When he joined? Jan 2028. He left the job in Jan 2030. He was there for 2 years. In between, they gave him shares. Will I count this for 200? No. Now he left the company. Now in Jan 2031, can I count it? Can I count these shares? Still no. Because he received those shares during course of employment. Are you following up? Only those shares that Ashwin bought after he left the company, then I will count for the purpose of 200. Are you following, Dinesh? This is for exam. So for exam we are done, guys. For exam, private company means a company which has a minimum paid up share capital of 1 lakh, minimum number of members 2, maximum 200, prohibited to issue shares to public, restriction of share transfer, it is limited to a count of 200, joint shareholders taken as 1, employees who received shares during employment or past when they were employees, we will not count them. Are you following, guys? Understanding? Hello? Clear, guys? Okay. Why? This is for exam. They will ask this only in exam. They will give a timeline like this. Any shares in this period only will not be counted. Any shares before he joined or after he left will be counted. My question is, with this over, guys, exam it's over. What is my question, guys? You can guess. What is it? Knowledge pulse. Why? Why employee shares not counted? In foundation also, I am sure you studied. Employee we will not count. Why? Those who are attending accounts may know the answer I told in the class. Law students will not know unless you studied foundation with me, but it's not a big deal. Why? Simple. You guys know the answer. Yes, Ashwin knows the answer. What is it? Why? Who all attended foundation? Foundation. Ashwin, I will told in class. Oh, okay, fine. Okay, I'll tell the answer. Follow, guys. For those who are attending first time. Again, it's a knowledge pulse. Not relevant for exam. Relevant to understand the concept of why 200 is eliminated. Do you want to know or can I skip it? Hello? You want to know. Follow, guys. Now, I told in accounts, I'm going to again repeat. Follow, guys. Now, a company's share price. For example, let's take Sun TV. It's a TV in Chennai for those who are not from Chennai, Tamil Nadu. Sun TV, Sun Network. Everybody will know, even if you're not from Tamil Nadu, Sunrisers Hyderabad, owned by Sun Network Group. Okay. Now, Sun TV is a TV. Their share price will increase when, for example, in Tamil Nadu, Sun TV Group won the election. They are the current ruling party. Now, after election, will Sun TV share price increase? Will it increase, guys? May increase. Sun TV only is the production for many Sun Productions, is the production for many big movies. Like for example, Rajinikanth's latest movie which came 2 movies back, Jailer. Sun TV is the production. Now Jailer movie, if it became hit, Sun TV share price will go up. If Sunrisers Hyderabad win the IPL, Sun TV share price will go up. If they win, guys. Okay. If they come to playoffs, it will go up. In the year 2016, SRH won, correct? That year, Sun TV share price went up. Correct? So, what decides the share price is not one thing. It's multiple things together. Multiple things together. Are you following, guys? Now, but all this IPL, see, SRH wins means, okay, temporary jump, again it will come down. Election, if they win means temporary jump, again it will come down. These are all temporary movements in share price. Market for I need a permanent increase. Sun TV share price today is around 500. I want to make it 1000. Permanently, it should be a base. ITC company is a company whose share price will never fall. ITC share price fell only during COVID. That's it. Otherwise, it will always be in the benchmark. It will never crash. Like how Adani crashed. It won't crash. Like this, how to make it go up? A company's share price will go up only if, what is the long-term thing, guys? Profit. Only if profit goes up. How profit will go up? Sales. How sales will go up? Who has to work well? Employees have to work well. How to make employees work well? Call one spiritual leader and put one speech or put one garland on employees and put best employee award and stick it on the wall. Ask you to work long hours. Will you work? No. I told I have to motivate my employees. How to motivate my employees? I can't motivate you by giving a motivation speech. Need to give you what? Money. Again, I'll ask you, will you work for a 5 lakh job, 5 lakh per month salary job, where you have to work from 7 a.m. to 10 p.m. every day, and you have to work with zero salary, 7 a.m. to 10 p.m. Everybody will choose what? 5 lakh salary, 7 a.m. to 10 p.m. Now your family is opening a business. Restaurant, I discussed, family is opening business. If you are starting your own startup, your income is, but you will work 7 a.m. to 10 p.m. Indians have this emotion. If it's my thing, I will work how much hour I want. Money is secondary. If it's for somebody else, I want money. If you feel it's yours, you won't ask for money, correct? So, employees, how to motivate them? If I give them shares in the form of ESOP, I will tell them, today I will give you share of Sun TV when the share price is 500. You work well for 3 years. If you work well for 3 years, share price will become 1500. Then you can take those shares. I will give ESOP to employees. So shares are given to employees to motivate them to work so they can get the profit. So if you look at, apart from this, if you look at startups, guys, startups are not having money. So how they give money to employees? They give shares. If you take this company called Freshworks, Freshworks is a big company listed in US Stock Exchange. When they started, for the key employees, they gave shares. Now when the company has become big, those employees with those shares purchased BMW cars and purchased houses. And when the company started, those shares was nothing. But I didn't have the money. So I want, let's say, I want Ashwin to join my company, for example. Ashwin is saying, sir, I am a CA, sir. I have to get paid at least 1 lakh per month. I am telling Ashwin, I can't pay you 1 lakh per month. Work with me for 5 years. If our company becomes success, the shares you have, you can buy 2 BMW cars and 1 house in Nungambakam. Choose what? 5 years job where you can buy 1 Maruti car, or shares in startup, 2 BMW cars and 1 house. It's a risk. But you will take shares and come in startup. If he's ready for that gamble, he will come for it. So companies give shares to employees for various reasons. So the reason why I am giving shares to employees is not for money. So it's excluded. Are you understanding, guys? Clear? So for exam, what to remember? For exam, you just have to remember this. Minimum is 1 lakh paid up share capital, restricts right to transfer. OPC, leave OPC, maximum number of members is 200. Joint members are counted as 1. Current employees are not counted. This is not posted as past employees who have been allotted shares. Even though they are continuing employee, even if they are not employees, we will not count them. When they received shares during employment. Are you following, guys? That's it. This only for exam, guys. Nothing else. Are you following, guys? Now one last concept in public company. Last concept in public company. Beautiful exception, guys. I'm just striking off this because answer is right here. Hopefully you have not read that. Okay. Look how beautifully they have told, and I want to know why. I don't even know if you have read this. Means a company which is not a public company which is not a private company. So let's do Bar Act understanding. I will not do this for all sections and try to say, come on, let's do Bar Act. But few sections I will tell you how to read law. This paragraph provided that is straight from Companies Act law, copy pasted. Okay. They are saying public company means a company which is not a private company and has minimum paid up share capital as may be prescribed. Okay. And provided that means a proviso, provided that a company which is a subsidiary of a company not being a private company shall be deemed to be a public company for the purpose of this act, even where such subsidiary company continues to be a private company in its articles. Can someone tell me what they are trying to tell here? 1, 2, 3. Bar Act understanding. Read it. Take your time. Perfect. Ashwin got it right. Others follow, guys. They are saying provided that exception that a company which is a subsidiary of a company not being a private company. How to read law? A company which is subsidiary of a company. Let me write that down. Look at this. A company which is a subsidiary, a company which is a subsidiary of a company not being a private company. That means this company is a holding company which is a public company. Not being a private company means public company. So a company, let's call it X, which is a subsidiary of another company, not being a private company which is a public company, shall be deemed to be a public company for the purpose of this act, even where such a subsidiary company continues to be a private company in its articles. That means what they are saying. Look at this. So I have to read this. Till here you understood. Shall be deemed to be a public company for the purpose of this act. Which company? Such subsidiary company. This company will be deemed to be a public company even when such subsidiary company is a private company. Even if this is a private company, it will be deemed to be a public company if private company is subsidiary of holding. That's why I gave you in simple bracket. Sir, exam what I should remember? Private company is subsidiary of a public company is a deemed public company. This only is conclusion. They wrote like that. Are you following, guys? So what is the final conclusion over here? Let's take a public company, Adani Limited. Let's take a private company, Adani Private Limited. Are you following, guys? Private company has to use the word PVT. Public company will use the word only LTD. What he is telling, sir, what I should remember for exam? This is a public company. This is a private company. But this is deemed to be a public company. That's it. For exam, that's all. Not asking why. Not getting the logic of why, guys. Why? Why? No, why guys? Assume the percentage is 70% holding company. Why? So what if holding is public? Why can't subsidiary be private? Why are they saying a subsidiary of a public will be public? Why? So if they have control, so what? Then I will write opposite. Okay, let me write the opposite. Holding is private. Subsidiary is what, guys? Public. Now can I say public is deemed private? No. Here that provision will not be applicable. Here holding remains as private, subsidiary remains as public. Only here that exception is coming in. Why? Perfect. I wanted you to think, guys, very simple. Public company Adani gets money from whom? Public. So Adani raised, let's say, 10,000 crores from public. Now if Adani is investing in Adani Private Limited, if Adani has private shares, 1 lakh shares of 10 each, what is 70%? 70,000 shares of 10 now. That means they invested how much? So Adani Limited invested 7 lakhs in Adani Private Limited to make Adani Private Limited its subsidiary company. From where it got money to invest? It got money from public to invest. Are you following? So public company is using public money to invest in private company. This private company will take this money and run. Who's suffering? Public. Are you following? That is why the law says subsidiary of a public is a deemed public company. Here that will not come. Here why? Private company is what money? Private money, not public money. Only public is taking money from public. It can't go upwards. Now in main exam, many times you will get confused. Sir, which is deemed, sir? You will get confused. So if I have to summarize, public is holding, subsidiary of private, it is deemed to be a public. If holding is private, if subsidiary is public, both remains to be the same. Exam you will get confused. When that deemed will come, you may get confused. But if you learn logic, because public money is going into subsidiary, it becomes deemed, you will not get confused. Are you following, guys? This is another beautiful point we had in foundation, we have in inter also. Clear? All of you understanding? Sir, for exam, what should I remember, sir? Logic, no, I don't want. No, sir, I want to memorize. For exam, a private company, which is a subsidiary of a public company, is deemed as a public company. Are you following, guys? All of you with me? So, what all we studied today in introduction of incorporation chapter, on base of formation, we have registered company, statutory and started. Here we studied limited, unlimited, guarantee. Here I studied private and public. Here we studied holding and subsidiary. Correct? If I finish the rest of the chart, the chapter will come to an end. Let's summarize once what we studied together. So for exam, the whole class, what is important? Registered company means a company registered under this act or any other previous act. Loudly with me, guys. Statutory company means a company registered under a special law under parliament. Chartered company means a company which got the royal charter of king or queen for any person of investment, exploration, for colonization, all of that. Then, guys, limited company is a company where shares are limited. The liability of members is limited to the amount unpaid on calls. Unlimited company where liability is unlimited. Not that practical today. Guarantee company is a company where shareholders give guarantee to contribute money at the time of winding up. Guarantee companies of two types. Company with share capital, without share capital. Private company and public company. Public company is a company which is not a private company, and under public company, any company which is a subsidiary of a public, any company is subsidiary of a public company is deemed to be a public company. So if subsidiary is holding, sorry, if public is holding, everything below becomes public in simple. Then private company, what we learnt? Private company minimum number of members 2, maximum 200. Public minimum is 7, maximum unlimited. Private company minimum paid up share capital is 1 lakh. They have prohibition to issue shares to public, but they have restriction on transfer of shares. For counting 200, joint members are counted as 1. Employees who receive shares during employment will not be counted. Holding subsidiary relationship is holding has at least more than half of total voting power in subsidiary, either directly or indirectly, or controls the composition of board of directors. Can subsidiary have shares in holding? No, subsidiary cannot have shares in holding. However, there are exceptions in section 19. 3 exceptions, new things we learned. What are the 3 exceptions? Such shares are held by subsidiary in holding before the relationship of holding subsidiary is established, but they will not have any voting power. Second, subsidiary is having shares as a legal representative of deceased member of holding. And third, subsidiary is having shares as trustee in the holding company. I am not having shares, but I am a trustee taking care of those shares. Are you following? This only we discussed today for exam, guys. This only we discussed for exam. Totally Companies Act, how many sections? 470. Keep telling every day, guys. You can't tell I won't read this. 470 section. What is section 1? Title of that. What is the title? Companies Act. Section 100. Extraordinary General Meeting. Cricket 100, I told you. Extraordinary General Meeting. We discussed first class. Okay. Now what we learned? 123. Declaration of dividend. 123 Rule 3. 3 rules. 123 Subsection 3. Interim dividend. 124 Unpaid dividend. 125 IPF. 126 Abeyance. 127 Unpaid dividend. Randomly, once you declare dividend, transfer separate bank account in 5 days. Once you declare dividend, pay within. If your dividend is not paid or not claimed, transfer to unpaid dividend account within 7 days. If you fail to transfer in 7 days, interest is 12%. Then once you transfer here, prepare statement, summary report in. Money will stay in this account for 7 years. After 7 years, money will be transferred to IPF. IPF section 127. If you don't pay dividend within 30 days, 127 penalty. What is the penalty? Interest at 18%, imprisonment up to 2 years, fine of rupees 1000 per day of default. Are you able to recollect, guys? What is 126? Abeyance. If there is a dispute or no transfer is pending, dividend will be transferred to unpaid dividend. 124. Rights and bonus kept in abeyance. That's if we revised full dividend except 123. Are you able to follow, guys? This you will be able to do. Now look at your rocket notes. Look at your rocket notes, guys. Fast. Looking at that full rocket notes. Are you able to revise the full dividend chapter? I want recording students to do it, guys. Are you able to revise in a fraction of like few minutes? Now day before exam, it's about quick revision. Are you all following? Hello? Now, the biggest problem we have is, before law exam, you have 1.5 days. Accounts not an issue. You can take 3 to 4 days, but still that's not enough. But for law, you have only 1.5. Accounts, we have 3 to 4 days. For accounts, we'll discuss in accounts. Library of adjustments will help. In law, in 1.5 days, biggest challenge is in 1.5 days, how to revise the whole syllabus. In school, we didn't have that problem because for each exam, we used to have 5 days leave. 12th board, CBSE, correct of 5 days. Some exams used to have 10 days off. Sometimes we'll have 1 or 2 days. Correct. But CA exam follow, guys, 6 exams every alternate day. That means in 1.5 day, look at the study mat. If you got the study mat of law, how many modules? 3 or 2 or 3. Can you read that full thing before exam? Chanceless. The book I'm going to give you, 1 module, that you can read once, but the key is your rocket notes. You can read it 3 times before exam, 3 revisions in 1.5 day. What matters is how many times you can revise and how well you can remember for exam. You might be studying very good for 9 months, 6 months, 3 months, but if you end up screwing up everything in that 1.5 day, gone. If you're not able to recollect, because examiner doesn't know how much you prepared. Examiner knows what you give him in 3 hours, and what you give him in 3 hours depends on how much you can recollect in 3 hours, and what you can recollect in the 3 hours depends on how much you can revise in 1.5 day. See, today you can't revise law in 1.5 day, but after we finish our lectures of law of close to 100 to 110 hours maximum, once we finish our lectures and once you read, the first time you revise something might take you 2 hours. Then the time will keep reducing. With the help of Rocket Notes, in 1.5 day you can revise 3 times. That's why Rocket Notes are important. You have to do it for all chapters, including this chapter also. This chapter I will not do. You have to make it in your notebook, Rocket Notes. I'll give you the material. You have the material. Using the class, using the material that you have, immediately within the next few days, you have to prepare Rocket Notes for the chapter. So when the chapter gets over, if you do the Rocket Notes recording, send it to me. Then it's good. Don't copy others' Rocket Notes because you're writing in short form. So what he's writing, you can't write. Are you following, guys? Clear? Understanding? With this, we'll close this unit 1. One more class like this duration, same time. We will finish off unit 1 fully. We'll get over. So with this, any doubts before I close? Online, yes. Yes, what's the doubt? Sorry, I'm not able to hear your doubt. What is the doubt? What is he saying, guys? Guys, can you all be silent? Silent, guys. Can you repeat the doubt again? Yeah, information. What is his doubt? To explain registered company and chartered company again. Huh? Hello? I'll just quickly explain. Registered company is a company registered under this act. Chartered company is a company registered under Royal Charter of King and all of that. Did you miss the starting of the class, Vignesh? No. If you are joining late and all, I am not going to repeat. You go watch the recording. Don't ask me to repeat anything which you joined half an hour, 1 hour late. It's not my responsibility. Go watch the recording. For everybody watching live, if you are coming late, I cannot repeat. Recording is there. I am not going to repeat it for any topic. Any doubt, when you attend, if you have a topic, let me know, I will repeat. Following, guys. Any doubts? Google Meet here from what we learned. Yes, Janeshwar. Yes, triangle holding. No, see, X and Y, subsidiary cannot have shares in holding. X can have shares in Y holding. Y cannot have here. But here, X is holding, Y is subsidiary. Y is not controlling X. Y is controlling Z. Z is controlling X. So it's not direct. So it's fine. The law uses section 19. Subsidiary cannot have shares in holding. Subsidiary is not having shares in holding. Subsidiary is having shares in holding. That law is not having a restriction. Nothing. X will control Y. Y will control Z. Z will control X. If there's a conflict will keep going in a triangle. That's all. Yes, Y can control holding through Z. But still there is one bypass. No, it's not direct. It's an indirect control. Following? Okay. Any other doubt? Ashwin, yes. Anybody else here? Online? Recording students, I will repeat the doubts. Whichever students are asking here, so that if it's relevant, it will come to you. The doubt Janeshwar asked here is, in triangle holding, aren't we bypassing the logic of subsidiary having shares in holding? Yes, but it's happening indirectly, not directly. Okay. Yes. That we have to wait and see. The doubt is asking is, if Sun TV is buying shares of Black Sheep, fully purchased, will Sun TV shares increase? Depends on the market. For example, I'll give an example, guys. Airtel 1.5 year back, follow Airtel guys, increased, everybody follow guys, Airtel increased the tariff charges. Do you remember before it used to be some 400 rupees for 3 months, then they made it 600 rupees or 555. Do you remember all the telecom companies increased the price? So first who started? Airtel. When Airtel increased the price, I thought share price will come down. Why? Hey, share price increase, we are angry. What happened to share price? It increased. Why? If tariff increases, revenue will increase. If revenue increases, profit will increase. We don't have an option but to pay the increased tariff. So share price increase. So share price going up and down, if I know when it will go up and down, it will come down, why I'll take class? Nobody will know. It's only about predicting using graphs and other things. Okay, that's it in this chapter guys. Anybody else, any other doubts? Okay, fine. Thank you guys. See you on the next session, continuing law.